everyone keeps telling us that inflation has gone down. It has not gone down. Get that out of your head. It has not gone down. It has slowed down, right? And so we are still stacking, and it's called compound interest. So the price of goods is compounding every single year. And so you can sit here and say, no, inflation has gone down. No, it hasn't. It's slowed down. It's only up by, 2.5% over last year, but that's still over last year, which was up like 30% over the following 2 years.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, hey, election right around the corner. We got great job numbers out. Everything's doing well unless you live in a state that gets hurricanes, in which case not so great. And how really these numbers, what is the Fed going to do next? All these questions and more. Eddy Gifford's with us, tactivewealth.com. Eddy, great to have you back on the show. If you got a question for Eddy or myself, shoot me an email, kl@kerrylutz.com. So it looks like we're in the calm before the storm, both in Florida and the country.
Yeah, definitely. We're in this situation where it's funny because you get one job print that's better than expected, and you just forget everything that's happened in the last 6 months, right? I mean, like we had a lot of good job prints all year long, and then we had a dramatic cut. And then all of a sudden we have a good job print when the election is around the corner. Now, I don't know. It's just kind of strange to me that when we get like adjustments upward, they're like 1,000 or 2,000, like very, very small, like margin, right? But when we get the adjustments down, they're like significant. Like I mean, we're talking when they came forward and said, "Oh, sorry, we didn't actually create 800,000 jobs." But it's okay because, the most recent print was good, so that everything is good again. Of course, the interesting thing about it is that it really has caused like an about face on the cuts from the standpoint that there's like nobody expecting a 50 basis point cut after that. And the Treasury market is telling us that. The Treasury market, I mean, gosh, the 10-year got back over 4% today. Like we haven't been there in forever. And so that is concerning, Kerry, because you can have every job print, you can have everything you want. You can like China just did a really big stimulus. We live in a global economy, and a lot of the things that are happening right now are more inflationary. Now, no one wants to talk about the fact that inflation could come back, but it did it in the 70s. Why couldn't it do it again? And why couldn't it be worse than it was in 2022? And I think that's kind of when you actually look at it and think about what could happen, you can't eliminate that possibility.
Yeah, well, look, we've talked about it before. Inflation goes in cycles. It doesn't just go away. And as Milton Friedman, one of the greatest economists of all time, no question about it, said inflation is first and foremost a monetary phenomena. Right? What did he get wrong there, Ed?
No, I mean, you're absolutely right. I mean, I think that the funny thing about it is that we want inflation too. The Fed is always, targeting. They're not targeting 0%, right? They're targeting 2%. And of course, they don't include things like sugar in the CPI. Why would they do that? It's only in every single thing that you can buy in a grocery store nowadays. And so it's always interesting to see CPI versus actual, because I know the people that I talk to every day right now, they're hurt by the fact that they're maxed out on the credit card, and guess what? A 50 basis point cut didn't really do much for them. And the other thing is that like everyone keeps telling us that inflation has gone down. It has not gone down. Get that out of your head. It has not gone down. It has slowed down. Right. And so we are still stacking, and it's called compound interest. So the price of goods is compounding every single year. And so you can sit here and say, no, inflation has gone down. No, it hasn't. It's slowed down. It's only up by, 2.5% over last year, but that's still over last year, which was up like 30% over the following 2 years. And so we're at this just like breaking point. And of course, it's like on the cusp of the election. And of course, there's these storms happening that are inflationary, right? Because now all of a sudden, that could mess with supply chains and all of these things. And then, oh, guess what? We got wars and that causes the price of oil to go up, which is also inflationary. And so there's a lot of things that we can't control that are going to have inflationary action. And then we have the Fed, which all they can do is control that dang rate. And when you think about it, at this point, with everybody being maxed out on credit cards anyways, a rate hike might as well be considered inflationary because it's just increasing the cost for the consumer. And so like the only thing that fixes it is true demand destruction, which is where we start talking about recession. We start talking about the S&P going back to the 2,200 range. No, that can't happen. Yes, it can. It's happened. It's happened 2 times in the last 25 years. And so it's crazy.
I'm going to tell you what I think is going to happen. Now the inflation, it's going to run its course, assuming they don't tank the dollar, which would mean tanking the entire global financial system, including the BRICS. They would go with it because all of our currency is fiat-based.
Right.
But I feel we are in a similar position to where we were in the 90s. And that was before the advent of the internet for most of us, for public consumption, as being the greatest communication tool, networking tool, and monetization tool ever created. And really, I felt like that brought the country out from an utter collapse that was going to occur. I think we could be in a similar situation with AI. And I don't know how AI will work, but I think AI is far more profound than the internet.
Yeah.
It's already affecting so much of what I do, both for business and pleasure, for show notes, for plotting out the show. I'm working for a company. I'm doing a marketing plan for them. I'm working in another company. I have to figure out what went wrong with the company. It has become a force multiplier for me because I can dispense with so much of the ordinary thought tools. Now, whether it'll replace me or not, I don't know, Ed, but conceivably it could drastically increase productivity throughout the economy. And then there will be job displacements, just like there always is. In the end, technology in the past is prologue. Technology has always led to more jobs. It might not be the case here, but I think that is our one light at the end of the tunnel. It might have this kind of effect. Imagine if our productivity went up 4 or 5 or even 10%. What would happen to the economy then, Ed?
Well, that's the thing, right? Efficiency drives productivity, and the AI component is more and more and more adopted because you know how people are, like they don't like change. Nobody likes change. We don't like to think differently. Why would we think differently, even though that everything tells us to think differently? The human brain doesn't work that way. We don't like to be rewired, but the reality is that the AI is kind of a rewiring of business. It's a rewiring of like the way that we think as business owners or as employees or as just like everyday people. Mm-hmm. And so definitely productivity, they always say technology is deflationary. And so the question is like, to your point, does this AI have the ability to kind of deflationize the incoming inflationary storm? And I think that a lot of it just depends on adoption and trust. And that's the thing that is steering, I think, a lot of people away from it too, is that, can I really trust this? Is this thing really going to work? And then when you buy in and you start using, you're like, oh my gosh, like I can get 10 times more stuff done because like I only got to do the last 10%. I don't got to do the first 90% anymore. And so, that unfortunately that does mean a lot of people lose jobs, but then there's also on the other side, there's a lot more different types of jobs that are created, and instead of like being on the factory line, now you just got to spot check things, before it gets to that final decision for that last 10%. So it could totally do that. I still think that we're in a situation where that's what brings us out of things getting really bad. I don't know if we can avoid what's coming, that's my biggest fear right now. Just an advisor is 2008, 2009, really bad. 2000, 2002, really bad. Why were we able to recover 2000 to 2002 and 2007, 2008? A lot of it had to do with technology. And I think that the technology will be the same that saves us from disappearing, right? But I don't think it's without a little bit of pain first, unfortunately.
Yeah, I agree. I mean, I think that AI is already taking over the government. There's a utility. I just happen to buy some shares in it. I'm not saying anybody should, called Dominion Energy. And there are primary areas like Virginia, Northern Virginia. And they just sent notice to everybody that if you want to open a data center in Northern Virginia, you have to make a reservation. If it's like 500 megawatts or higher, they have to reserve it because they're out of capacity. And that's something that's and that's the reason I bought them. I said, hey, to me, electricity is the best play on the economy because no matter what happens, they might not have figured out how to make money off of AI yet, but they're going to. There's no question. Some people are already doing it who got in early. It's not just NVIDIA, all of them. Like I say, I'm not saying anybody should buy this stock. Got up not that high for me. I've had it for a few months. It's up 10%, which isn't bad. Plus it pays a dividend. But I'm not saying anybody should buy it. I'm not a financial advisor, but I just thought it was a cool play on AI. And so electricity utilities, they're going to have to do dramatic expansions here. And it's not going to be enough just to put in solar cells and batteries. They're going to be building power plants here, right?
Oh, absolutely. I think that, it's interesting that you talk about that because, we were huge advocates of utilities this year. Like one from the standpoint that they were just they had underperformed so much relative to the S&P 500, but then also just because of this demand that you're speaking of. And so the funny thing about it nowadays is that utilities, generally speaking, are the thing, are if you're staying in equities, it's the flight to safety in equities. Mm-hmm. When things get bad, people, money managers, big money rotates, right? Because they can't sit in cash. They're not allowed to. They rotate to utilities. They rotate to value stocks. They rotate to dividend payers, right? And that's where they go. Well, now we've got this thing called AI, and we still have this thing called cryptocurrency, which is very tech heavy. We still have a lot of miners out there. We still have a lot of that is driving a lot of demand for electricity. A lot of these miners, it's not that they can't make money or that they don't have the money to buy the machines to be able to continue to make money even post halving. Mm-hmm. It's that they can't get the energy. Yeah, they can't get, and so. Obviously supply and demand is always the king. It doesn't matter what you're talking about. And if you need more energy, then the cost of energy is going to go up, right? And so I think you're absolutely right there. I think that as people figure out, and we have, more adoption on the AI side, we have more adoption on the Bitcoin and cryptocurrency side, that's just going to drive more demand for energy. And to your point, I know that Elon wants to just carve out a corner of Texas and just put a solar farm, but good luck with that. That's probably not going to happen. And that takes time. It's the same thing that we've talked about with the whole green energy off of this last administration. It's that's nice, but we don't have the infrastructure to be able to produce what we need to produce already. So if you start taking stuff away, well, guess what? That's also going to raise the price of energy. And so there's a very, very strong supply and demand story. And again, it's typically the area that is most valuable when things get bad. Not that it doesn't go down, right? But it doesn't typically go down as much. And these utility companies, people still pay their energy bills. They got to keep the lights on.
Got to keep the lights on.
And that's why the dividend keeps coming, So it's made it challenging as a money manager this year, because sometimes it's hard to decipher, is the energy play, the utilities play, is this a risk off factor or is this a supply and demand factor? And I think that that's what's caught a lot of tactical money managers off guard, is that they've leaned into utilities as like a risk off play. And what's happening is it's becoming more of a supply and demand play. And so it's ciphering that is becoming much more challenging when you look at your traditional intermarket relationships and the coming storm. That's why you got to go back to basics and look at our good old favorite, good old gold, right?
Yes.
It's been sending a warning. I mean, not saying that you need to jump on the sidelines, but we do have a significant warning being set by gold. I mean, you look at today, right? Like everything in the market is down except for Bitcoin. That's interesting, right? And some of it may be conflict. Some of it, a lot of it could be just distrust in fiat, like you were speaking about. So it is very interesting, kind of the new supply and demand dynamics that are coming out as more technology becomes available.
Yeah, Bitcoin was up. It's got to break that 65,000 mark.
Because I keep getting the 66 and then retreating. So we'll see if we can do it this time. Because I think the high is in the 73 range. So I think it's got to probably go to 100, but
60
those first.
75 is psychological resistance.
Yep.
65 kind of is our current resistance point, but it broke through 60 again and 64. So going to be interesting. Its market cap now is 1.3 trillion, and I'd expect to see in the next couple of months, especially if there's a lot of post-election civil unrest, I'd expect to see it go higher. Ed, so we find you at tactivewealth.com, correct?
Yes, tactivewealth.com/Eddy-Gifford. Obviously, just go on the Google. You can also just look up Eddy Gifford. That's Eddie with a Y, Gifford. But yeah, hey, it's about to get exciting, Kerry. We're ready for it.
Never dull. Hey, and I'll do you one better. If you go to the show notes of this interview on financialsurvivalnetwork.com, you just click that link. It'll take you right to Eddie's site. While you're there, please sign up for your free newsletter. I think we're getting close to 35 or 40,000 subs right now as we speak. Goal is by the end of the year, first quarter Q1 of 25 to hit 100,000, which would be a huge milestone. Ed, appreciate you coming on. We'll talk to you again real soon. Oh, if you got a question for Eddie or myself, shoot me an email, kl@kerrylutz.com. Ed, we'll talk to you again soon.
I appreciate it, Kerry. Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.